Hey traders, welcome back to another trading video. Today we're taking a look at the Fed tracker, which is our newest feature on the Edge Finder, and I wanted to show you guys a little bit of my bias when it comes to the US dollar, the stock market, and the gold market going into a week like this where we have a lot of news on the radar. If we go to forexfactory.com, you can just see that this week is loaded with stuff to do. I mean, we have just on the red folder filter, we could see we have the Federal Reserve coming out and placing, or discussing their new rate hikes, the anticipated 75 basis point raise. We also have an NFP at the end of the week, and we have the Bank of England coming out with their interest rate decisions. Not to mention also, of course, the Australian central bank. So lots of central bank stuff this week. So it made me want to just take a second to take a look with you guys at my thought process on the dollar going into a week like this, as well as some of the other markets, the stock market and gold market as well. So a good overview of economic numbers, I like to look at these 5 different metrics. So if we take a look, for example, at GDP growth, the latest change in GDP growth in the United States, this is US GDP growth, was positive. We actually had a nice uptick in GDP growth. And this change was positive for the dollar. So that gives us a bullish reading, right? Because again, stronger GDP shows economic strength and puts more faith in the dollar. If we take a look at inflation actually declined here, which was not a great signal for the dollar, because why would that be the case? Well, going into a meeting like this, the Federal Reserve, their goal is to reduce inflation. If they're succeeding in that goal, they may be less inclined to raise interest rates. If they're not doing so good in that goal, then it might be, time to raise rates, right? So I hope I said that correctly. Higher interest rates with higher inflations, lower interest rates with healthier levels of inflation. Anyways, continuing on, if we take a look at unemployment, the unemployment numbers recently actually declined, which is a positive thing. Of course, unemployment is always a bad thing when it comes to the markets. And this was actually a positive thing for the dollar, right? Because, of course, strong jobs, economic jobs shows economic health. We take a look at interest rates. We also have an uptick in interest rates recently, with more of that probably to come here on Wednesday's report, another bullish reading for the dollar. And finally, money supply has actually been declining, which of course is another strengthening factor for the dollar. That's pretty intuitive. So overall, what does this leave us with? Well, it leaves me with a strong continued bias to be bullish the dollar, fundamentally speaking. So as we go back to our charts here for a moment, if we zoom over to our trading view, we could take a look at the dollar and talk about it. So we see a little bit on the daily chart. We saw some strength come in after this little fake breakout. So price popped underneath and immediately found buyers at that 109.75 level, somewhere in that area. Basically, we dropped underneath and found strength. So this to me looks like, again, we have to just go with the trend here. Fundamentally, I like it long, and from the dollar perspective on the chart, what was that level of resistance actually broke back out and could be offered as support. So if I'm looking at this thing now, again, dollar bullishness seems to be back, and so as we break higher, pullbacks could still be opportunities to try and pick it up long. So for example, maybe we mark out this area here. Intraday, we could find opportunities to pull back. Now, of course, we're not going to be trading the DXY. We'll probably be trading something like EURUSD. So I've mentioned on my live stream today, I would actually be interested in zooming in and possibly finding a sell side opportunity on the euro dollar, perhaps on a retest of what was support turned resistance. So if we draw fibs from here to here, you've got that 50% retracement. It might be an interesting opportunity to try and get an aggressive short going on the euro dollar. And by aggressive, I don't mean big position size. What I mean is, this is a relatively, brief pullback, but we're looking for that continuation as the dollar seems to be getting strong again going into the Federal Reserve's meeting this week. So possibly an interesting opportunity to try. For me, in my opinion, I'd be interested in picking up euro dollar on the short side and trying to hold it going into the remainder of this week. Which brings me to my next section I wanted to talk about, which of course is gold. A lot of people have questions about, is gold going to be bullish going into this week? Well, Let's take a look at the health here, and you can see very quickly that the readings here on the Fed tracker are almost completely bearish for gold, as they have been for a while. Let's break this down for a second. GDP growth in the US, we mentioned, was up, right? So we saw a strength in GDP growth. Why is that a negative impact for the gold market? Well, think about it. If the economic strength in the US is rising, if there's a strong economy underlying everything that's going on, if we see that improving, that means there's less, a drive to buy gold. Oftentimes people buy gold in fear-driven economies, people are, unemployment's rising, that sort of thing, which we could skip ahead and we could say, well, hey, unemployment numbers came down recently. And what did that do? Well, that gave us a bearish reading as well. Why? Because again, unemployment going up, fear rising is generally speaking a good thing for the price of gold. Taking a look at inflation, what we see is inflation just came down recently, which of course, inflation considered oftentimes a boost to the gold market as well. When price of goods is going up, people might rush to gold as sort of that safe haven. Interest rates also rising, which of course is a bearish thing for gold. And so you can see all the different economic or fundamental factors that we pay attention to are all pointing towards bearish gold. Finally, money supply. Of course, when money supply in the US is declining, think about it this way. When investors had a lot of money in 2020, right? When money was flooding into the system, we saw gold rise dramatically. That is because, again, lots of money in the system means lots of extra investing, and that could lead to gold buying as well, which was what happened big time in 2020. So again, we go back to the gold price now. Let's see what's going on with gold. Well, very similar going into this market, going into this Federal Reserve meeting. For me, what this means is predominantly looking for opportunities to get short on the gold market rather than trying to hunt for, trying to pick the bottom, if you will. So we had this momentum to the upside on gold, and it kind of fell apart. We saw a big swing to the downside, lower highs coming into this market. So this to me is a fundamentally bearish market as well as a technically bearish market. So what I mean by that is we already analyzed the fundamental side, and I concluded that for me personally, based on everything that I look at, is bearish. But then we take a look at the technicals and we say, well, where's the trade setup? You might get something here. You've got some resistance in the 50% retracement and just this little top here at that 38.2. So both of those areas look interesting for possible sells on gold. So possibly something like this could come into play this week, where if you get a little shoot to the upside and you're willing to take a little risk, of course, you might see some swing back the other direction. Of course, this is just my opinion. Please don't go place big trades just because you saw a YouTuber talk about it. It's never a smart investment or a smart idea. This is my opinion. I can be wrong. And in fact, I'm wrong very often with my trading. But being profitable in trading doesn't rely on being right all the time. It involves managing your risk, letting winners run, and cutting losers short. So that's why I have a stop loss. So if I was to take this trade, let's say gold comes up to that 38.2 and I pick it up short. If price just flies through the highs, we might have to reevaluate things, and that's okay. But if I'm able to catch a swing back the other direction, you might get some excellent opportunities on the short side. So I do like gold short as well as euro dollar short. So two short ideas so far. Let's take a look at our last section. Okay, so taking a look at the stock market here, what we can see is we can take a look at these same impact metrics. So if we take a look at GDP growth actually came out very positive. That's positive for the stock market. If economies are doing well, if GDP output is growing, hey, that's good. That's a good sign for stocks. If inflation is coming down, that's also good for stocks because there's a little less fear of interest rate hikes, which universally hurt stocks, right? So we can see that right here. If interest rates go up, then we are expecting bearishness to the stock market, which has been a really big crutch to the stock market recently, a very big hurtful thing, if you will, because interest rates in the US have been rising dramatically. If we take a look at unemployment recently is down. That's bullish for the stock market, stronger economy, more people out there buying products, good for businesses, right? And we already discussed inflation recently a lot, but inflation rising is generally seen as bad for the stock market, as that can hurt consumer spending and that sort of thing. So we're bullish in three of these categories. And so I'm going to say this, but I am slightly bullish actually on stocks. I think it might be a good opportunity, in my personal opinion, to look to get long on retests. And we can actually take a look at this. I like the S&P 500, and I marked up this chart in my stream here this morning, but I do like the idea of possibly getting some long exposure on the SPY on a retest at the 38.2. Now you've also got US 30 and NASDAQ 100, but my personal preference is the S&P 500. Get you that diversity of 500 different big companies. And then again, nice break of the structure from last week, and a retest here to me looks attractive for possible longs. This also actually has a strong bias on the edge finder. So we mentioned these factors that we got from the edge finder looking good, but then also the score chart summary is littered with lots of bullishness for, let's filter this by the top, lots of bullishness for some of the equities markets. So SPX, well, actually, what happened here? They were just up here top. Might have seen some decline just recently. So regardless, we're waiting for some of these things to flip bullish. Again, I think it looks like we had a little bit of a downtrend kind of swing back in this morning. So if we get some pullback and things start to look good, it might be that bullish opportunity. So I do still like it long myself, and would be potentially interested in picking up the 38.2% retracement. So there you go, guys. A couple ideas that I'm looking at today. And of course, please remember, trade safe. This is a wild market right now, and it's very important to keep your risk management very tight. So thank you for watching, and see you back next time. It looks like you made it to the end of one of my videos. Thank you so much for supporting my content. It really means the world to me. And down below in the description, I put together some of my best resources for aspiring traders who are looking to improve. I've got some free downloads that could help you, some broker recommendations, and if you'd like to join our Discord or get access to some of our trading software, all of that will be linked down below in the description. Thanks for watching, and we'll see you next time.